Damn, he want to sniff some ass so bad. Come on, bro. Sniffing everybody's ass. What it do, YouTube? In today's video, we're going to be talking about how you can use higher time frame confluence to get the perfect setup on a lower time frame entry. So stay tuned for the intro. We're going to hop on the charts and we're going to talk about it. Let's go.
Yeah, this is where I wanna be. Live my life like a vacation, every night a movie.
You can be whatever you wanna be. You can do whatever you wanna do. All you gotta do is put the work in and sit back and watch your dreams come true. You can be whatever you wanna be. You can do whatever you wanna do. All you gotta do is put the work in and sit back and watch your dreams come true.
All right, so let's talk about it. How to use higher time frame confluence to give you the perfect lower time frame setup. All right, so this is AU, and we already see that AU is on a major downtrend. This is the 4-hour chart. We see that this is on a major downtrend. So to put the probabilities in our favor, we want to be looking for sales, that's for sure. And what we have here on this 4-hour chart is an order block. Come on, computer. My computer moving slow as hell right now. But what we have here is a 4-hour order block or a supply, whatever you want to call it. It's right here, right? And we see that this is the setup that I trade, one of the setups that I trade, ICT market maker. Sell model. We have liquidity being taken right here with this candle here, right? On a 4-hour, goes up, takes all of these sellers from this move, takes them out of their trade, and then we have a big energetic displacement candle here, leaving us a good fair value gap right here and an order block. Now if you look here, you can see that price actually grabbed this liquidity from here, took all of these people out of their, everybody that was buying right here, it took them out of their position right here. That's what the market is here to do. Engineer liquidity and take liquidity. Give positions to traders and then take traders out of their position. That's just how the market, that's how they make money. So we got to be aware of that. So we see that the first step of this sell model has been completed with the liquidity grab here. It breaks down, breaks this structure here in the opposite direction. You have an intermediate term low here. I guess I'll mark it up for you real quick so you can see it. And price is fractal. It always repeats on every time frame. That's the beautiful thing about price action. All right, so you got your intermediate term low here. It gets broken here. And we're gonna wait for it to get back into that premium area, which it is on the 4-hour. Premium area is here. What's above the 50% level, tapping into an order block. 60 pips, basically a drawdown if you're entering on the 4-hour chart. So we're a scalper, so we're not going to enter on the 4-hour chart. Instead, what we're going to do is we're going to scale down. So let's go down to a 5-minute chart, see what we see. I'm just delete the fib so you don't get confused. So now we're on the 5-minute chart. Actually, let's go to the 1-hour real quick before we go to that 5-minute. And you see on the 1-hour, it's pretty much the same setup. Order block, liquidity taken here, intermediate term low here, broken with this swing. It's in a premium order block here. You could be looking for sales to come back down here. So from here, we'll go to the 5 minute. And on the 5 minute, we're just gonna play it to see what happens once it taps into this order block. Keep in mind, the red line that you're seeing right now is a 4-hour order block. Keep that in the back of your mind. So it taps into it, and now we're pretty much gonna look for a setup to bring us back down to this liquidity level, or the main liquidity level down here, external liquidity. Internal liquidity, external liquidity. All right, so let's see what we get. All right, we got price rejecting here and forming a swing. I'm gonna zoom in so y'all can see this. It's forming a swing low here. Remember, in the back of your mind, we are bearish because it's a sell model on a 4-hour chart, our higher time frame confluence. It's a sell model. And so we're at the point of entry on the 4-hour chart, but we want to zoom in and scale down to a 5 minute so we can get a better risk to reward and not have to risk 1,000 pips basically, because we're not swing trading, we're scalping. We're trying to get in and out the market. All right, so you have a break of structure right here, right? With this candle breaking this and taking that liquidity here, right? And if you look close, what we also have is a small order block right here. See, price kind of already showed its hand by rejecting off of that 4-hour order block. It rejected here once, right? Tried to come down but didn't. Came back up, rejected again, broke this structure that it formed, this swing low, left a little mini order block, and now at this point you can take your fib from this swing high to this swing. I'm gonna stretch out the candle so y'all can see it, because I'm sure it looked like consolidation, but with the candle stretch you can see it clearly, and you see that this order block is above that 50% level on the fib, above the 50% retracement, so we can sell if it gets to that order block. Remind you, 4-hour order block here, rejected off of it, now you would bring your fib down here since the swing is lower and still above the 50. It taps into the order block formed on the 5 minute. Price is fractal, so when it forms on a higher time frame, it should at some point it should form on the lower time frame. So boom, we can be entering here, and you can put your stop loss here, 5 pips if you want a sniper entry, or you can be safer and put it up here, 11 pips. I'm going for that sniper entry, 6 pips. You do have this fair value gap here, so you can take profit here if you want, and that's 6 pips to win about 10 right there if you want. But we're just going to target, because this is a higher time frame confluence setup, we're going to target this level of liquidity. And these white dotted lines is where price opened up on a higher time frame on Sunday, and it gapped. It left a gap in the market, and that can be used as support and resistance. That's another video, but it left a gap in the market when it opened up on Sunday, and that's what these white lines are. So you could take profit there, or you can take profit at the external liquidity down here. TP1 in here, TP2 here, take partials. Let's see what we get. Tap me into the trade here. Now we're in it. At this point, I mean, how many pips is that? At this point, you're up about 35 pips, and you risk 6. So let's go ahead and move our stop loss to break even, or you can move it into profit like over one of these swings, but we'll just keep it at break even for this example. Price is just melting. TP1 smacked TP2. Retraces a little bit, and here's where it gives you another opportunity, guys, because like if you look here, you can see that price takes this area of liquidity right here, right? So it's low-key giving you another setup. This is the 5 minute, but you can see it happen right here. So let me try to go down to the 1 minute. Hopefully don't mess it up. Okay, so you see liquidity being taken right here, right? And this is now on the 1 minute. Liquidity got taken here. It formed an intermediate term low. Let me just mark that up for y'all real quick so y'all can see it. Stay with me, don't get lost. So intermediate term low broken. Right there. And at this point, you know, you're just gonna drag your fib. We'll just take it from here. We see that we have a gap in here that's in a premium. We could be looking to enter another sell position. Sell would have been there. Stop loss over the top. TP down here with TP2. And let's see what it do. Ooh, pull back a little bit. Price is melting. TP2 smacked on both positions. So you see on the 1 minute, it gave you the setup. On the 5 minute, it gave you the setup. And on the 4 hour, it gave you the setup. That's how you do top-down analysis. That's what it is. You start at a higher time frame, find a setup, and then you look within a lower time frame to find the same setup and to give you better risk to reward. And this is how you can avoid a lot of losses too, because a lot of people will stay on those lower time frame charts and they won't look at the higher time frame, and they'll see their setup on a lower time frame, but it's at a higher time frame key level. And on higher time frame key levels, you have these big explosive moves like this, so you got to be aware of that. But yeah, that's how you use higher time frame confluence to find the perfect trade setup on a lower time frame. I hope y'all was able to get some value from this. This is the way I trade the market every day. And yeah, we just gonna keep getting better. So appreciate y'all viewing the video. Till the next one, I'm out.